Yesterday after the market close, the Federal Reserve announced the results of Comprehensive Capital Analysis and Review (CCAR). In CCAR, the Federal evaluates capital ratios under distressed financial and economic conditions, the plan to comply with Basel III capital requirements, and the capital planning process. The Federal approved capital plans of 14 firms including Bank of America, Citigroup, and Morgan Stanley. Goldman Sachs and JP Morgan Chase received conditional approvals. The big surprise was approval of Bank of America's plan to repurchase up to $5 billion of common stock and to redeem about $5.5 billion of preferred stock. These amounts exceeded expectations. The market reacted favorably. In after hours the stock was up about 4%, and pre-market Friday it is up 3.8% to $12.57. We have simplified our company and we have more than adequate capital to support our strategic plans. We are well positioned to return excess capital to our shareholders, said Chief Executive Officer Brian Moynihan. We believe buying back common shares is the best way to continue to drive value for our shareholders. It is important to note that the book value of Bank of America is $20.24. The stock trades at approximately 60% of book value. In comparison, JP Morgan's stock price is approaching its book value. Of course, JP Morgan is a much stronger company and does not carry the mortgage-related baggage that Bank of America carries from its acquisition of Countrywide Financial. Herein lies the opportunity. The housing market is getting better. CCAR assumes severe distress in housing conditions, and now due to courtesy of the Federal, we know that Bank of America can survive such circumstances with flying colors. Special offer: after falling 40%, Apple is priced like a value stock but still growing like the weed on mountains of cash. Its valuation and 2.5% dividend yield look tempting. Time to buy. Click here for a free trial of Forbes Dividend Investor and immediate access to the March 13th subscriber hotline. In the last 5 years, there have been two major opportunities to buy Bank of America. The first was in the middle of the financial crisis in the zone of $3, $4. The second opportunity occurred after Warren Buffett announced Berkshire's Bank of America preferred stock purchase. The dip in the stock after the euphoria of the Buffett purchase in the zone of $5, $7.50 was a perfect opportunity that I'm happy to have acted on. I have previously recommended taking partial profits but plan to add to the position. Bank of America stock is among my top 10 picks at this time. I do not chase prices and will patiently wait for a pullback. The exact price and timing will be determined by a combination of Fibonacci retracement levels and what I call my smart money flow indicator. The back resistance zone below the breakout point now serves as the support zone. We will be using the midpoint of the support zone to calculate retracement levels. About me: I am an engineer and nuclear physicist by background. I founded to incorporated 500 companies, and have been involved in over 50 entrepreneurial ventures. I am the Chief Investment Officer at the Aurora Report, which publishes 4 newsletters to help investors profit from change. Write me, mcgam@theaurorareport.com. Follow me here. Subscribers to the Aurora Report are long Bank of America from $7.69, JP Morgan from $34.14 and Citigroup from $35.52.